Hello guys, hope you are having an amazing Monday. This is Adriana Goring. Welcome to my channel. And if you're not familiar with who I am, I'm an industrial engineer now working as a real estate agent here in Miami. I've been also investing long term in the stock market for a while already. So don't forget to subscribe and smash the like button for the YouTube algorithm. In this video, I'm going to talk mainly about the stock market, how to get started, and some strategies that you can use in the stock market. I decided to do this video because I know people have a lot of questions when they are starting with the stock market, such as how much money do I need to start investing? Where should I invest? How does it work? Where can I go and look for information in order to start and learn more about the stock market and everything else? This will help you save more money while investing it and build up your account little by little so you can have enough money to retire when the time comes. First of all, before starting to invest, you should take a look and understand your financial situation right now. Because as I said in my last video, sometimes it's just better to pay off debt before investing. I say this because sometimes you are being charged so much money on interest that it will be really difficult to make that money back by only investing in the stock market. So first, take a look at your situation, be realistic, and know if you can start investing right now or you need money first to pay off that credit card debt that you have or college debt that you have. Now, if you figure out that you can actually start investing right now, start by saving an X amount of money monthly or weekly to put into your investment account. You don't need thousands of dollars to start investing. The next question is, how much money should I start with? Actually, I can't tell you an exact amount of money that you need to start investing in the stock market. But in my opinion, you have to start small. Maybe with some $100 or thousands of dollars or something like that. I'm saying that I can't give you an exact amount because it all depends. If you have $500 saved up, I can't tell you to go all in. Now, if you have $1,000 or $2,000, then maybe $500 might be good for you. Now, don't feel that because it is a small amount of money, it's not worth to start investing. Little by little, you will be able to add up your investment account. So you gotta start somewhere if you ever want to start investing. You can start with $50, $500, or even $10,000. But the important thing here is that you get started. Another question I hear a lot is, where can you buy stocks? To invest in the stock market, you need to open an investment account. You need to decide which type of account you want to open. If it is a Roth or traditional IRA, it is a joint account, a cash account, trust account, or whatever you want. If you're a beginner in the stock market, I recommend either Robinhood or WeBull because they don't charge commission for any transactions and the platform is really friendly. Right now, I use Robinhood for my long-term investment because I started with them on September 2017, and since it was a really beginner-friendly platform, I decided to stay with them. And if you want a free stock, use the link down in my description when you're going to sign up for this platform. Now, there are different brokerage accounts such as Fidelity, M1 Finance, TD Ameritrade, which also started with zero commission and fees since last year, 2019. All of them are very good. They all have pros and cons, but overall, they are very good. They have a good customer service and everything. You will never go wrong with any of them. Another important thing is that you should know the difference between stocks and mutual funds. First, mutual fund lets you purchase small pieces of many different stocks in a single transaction. Index funds and ETFs are a type of mutual funds that track a specific index funds such as the S&P 500, which are the 500 largest company in the US. By investing in this fund, you will be owning a small piece of those companies' stock. Now, if you would like to invest in a specific company, then you can buy a single share of that company and try to create your diversified portfolio by yourself. Both types of investments are different. The better thing about mutual fund is that they are very diversified already and you will be exposed to less risk. And also, you'll spend less time investigating about a single company. The upside about owning an individual stock is that if you pick the right stocks, it can pay off very well in the long term. Another common question I always read is how or where can I go to learn about the stock market? You can literally just go to Google or Yahoo Finance and type the stock name, such as, let's say that you want to check out Apple because you like the company and you want to invest in it. Then just type the Apple stock on Google and you'll be able to find a lot of information about this company. Look up for the annual report so you can check their financials, the income statement, balance sheet, their investment, their debts, everything you need to know about a company in order to decide if you should invest in this stock or not. All these will help you understand what the company does, if they are profitable or not, if the stock is undervalued or overvalued. Now, remember to never invest in something you don't understand. So if you already spent a lot of time investigating a special company and you still don't understand what they do, maybe that's not the company that you should invest on. Okay, now let's talk about strategies in the stock market. In my opinion, there are a lot of strategies people use to invest, but I'm only going to talk about two of them. The first one is called fundamental analysis. Basically, you have to find the value of a company and notice if the stock is undervalued or overvalued. Obviously, you don't want to buy a stock that is overvalued, but only undervalued. After you calculate all these numbers and notice that the stock is undervalued, then buy a little piece of this company. It will give you very good return. There are some financial statements that you should check out, read, and understand if you want to start with this fundamental analysis strategy. The statements that I'm talking about are the income statement, the balance sheet, and the cash flows. This will help you see how the company is doing and where are they standing right now. Learn how to read them and understand these statements, and you'll be able to say if the company is undervalued or no. Other things that you should check out are some ratios, such as the PE ratio or the price to earnings ratio. This ratio normally is used to compare a company against its own historical record and also to determine the relative value of the company. Another ratio I consider important is the EPS, or the earnings per share ratio, which is used by investors to know if the company is a safe bet, if it is profitable company or not. This strategy can seem to be boring because it's not a get-rich-quick thing, but believe me, it will bring you such good return in the future that you'll have a lot of money or enough money to retire. The second strategy I'm going to talk about is technical analysis. This strategy is more for people that is into short-term trades such as swing trading or day trading. People that trade options or just stocks, but they like to get in and out faster. In my opinion, this strategy is not for everyone since it's very difficult. It can be effective for a lot of people. I even know a guy that likes to day trade and swing trade options and makes a ton of money with this strategy. But also, I know way more people that have lost a lot of money with this strategy. In my opinion, it's not a very good strategy to start. You can get very emotional while doing it and makes you lose a lot of money. And also, it's more time-consuming strategy since you need to analyze way more daily than what you would do with the fundamental strategy I just explained. But if you want me to talk more about this type of strategy, then comment down below. That was all for today, guys. I hope you enjoy it. Thank you for watching. Don't forget to share this video with all your family and friends that would like to start investing. Don't forget to subscribe and smash the like button for the YouTube algorithm. Thank you. Then maybe that's not the company that you should raise. Which
stock are you